Hey everybody, it's been a while since I made a video, and the reason why is because I've been a little busy with other things, and because of that I've sort of put these types of things on the side. For me personally, I find it very difficult to make like daily videos about economics or stocks just because I feel like for me personally, I try to look at things from a macro perspective first and try to predict things in the long run, and then try to understand like the things we currently see going on a day-to-day basis. And because of that, I don't really feel the need to make daily videos, and I don't really think it's ethical sometimes to make daily videos, especially with the nature around stocks. So like some examples would be I do see people making daily videos on a stock or company, and I don't really know if those are really necessary. And my whole point is to promote maybe research, studying, and actually trying to understand how things work. That way, you don't become reliant on someone as a guru of some sort, but you sort of understand the fundamentals of how things work or how someone thinks, and then you can sort of try to figure out your own philosophy on how to handle the ever changing world and the ever changing conditions and how to best position yourself to do well. And so I don't think I could ever make daily videos on like stocks or economics. I mean, maybe economics to like discuss how I feel about something, or like how something is positioned or a company is based on the day-to-day news. But sometimes I don't really feel like it's necessary. So that's why I haven't been doing it. I feel like there's a lot of people doing it, and I don't know, it just kind of rubs me the wrong way when I see that, because I don't think it's really helping people. It's kind of like dangling a carrot in front of like a horse, you know. And so again, like my whole thing is about trying to help others, consider a few things and then try to build their own framework of how to like navigate the world and things like that. So none of this is financial advice. Please do your own research. So everything I've ever said, anything I will say in the future, is not to be construed or to be used as financial advice. This is just my opinion. I'm ignorant and I don't really understand things. I'm just a fool with an opinion, okay? So none of this is financial advice. I am a professional. I am not a professional of any sort, okay? So I'm going to be taking my time with this video, and I'm going to be discussing a few things that have been on my mind, and I think it pertains to the stock market in general and Chinese companies. And if, for example, in my humble opinion, not financial advice, if I were investing in NIO, for example, or trying to find the best entry point, I don't think I would particularly care about the day-to-day or like what the company announces all the time, mainly because I think there's a lot of symmetry in the market. I don't know if that's the right terminology, but basically, if there is no such thing as like hidden information. Like, I know there's a lot of people on YouTube who are like trying to suggest that they're like NIO insiders and NIO gurus, but while you can predict things, and I think that's the way to go, I don't personally think that someone has like information that can be used to help somebody find a better entry point. Like, there's no such like insider trading, for example. Like, I don't think any of these people, despite trying to position themselves as these types of gurus, are actually that. But I do believe that like you can maybe find unrealized value by identifying it, and I think that's generally why I do things and present things the way that I do. So like, I could say that, well, just because right now the markets don't see value in a company right now in response to their stock, that doesn't mean that we don't see value that could happen, or maybe that's not really realized for XYZ reason. But while things are sort of priced to perfection, I guess they would say, to an extent, that doesn't mean that something else isn't priced to perfection as it could be, or it could be if things change, right? So like an example would be that some people would claim that Nvidia or Meta is fairly valued right now, which, despite all the premiums that people have to pay and like the PE ratios and things like that, or that American companies based on CAPE ratios compared to China, for example, for XYZ reasons, like geopolitics, or economic stability, are the reasons why that they can justify a higher CAPE ratio for United States versus China or Japan because of whatever reasons that the market decides is the reason. And these things can change really fast, or they could be changed in the future. You just have to sort of try to predict when that could happen. And I think to look at things like that, it takes like a larger amount of research, time, and understanding, along with some philosophy as well, I think, and understanding of economics, history, and things like that. So it can be very time consuming. So, but I think that for me personally, that's the right approach to understand economic, finance, and history, and how business works and cycles and things like that, more so than like, what did NIO do today, or like, what is today's Google News on NIO, and like, I don't know. I don't feel like those are very good. I mean, it wouldn't be too bad if you could have watchdogs, for example, track the company's every performance and then try to like determine like a forecast that's very accurate and then trade off that. I could see that, but I don't think anyone's really doing that. So yeah. Anyway, so again, none of this is financial advice, and nothing I will say is financial advice. Nothing I've ever said is financial advice. Please do your own research. So I'll be taking my time while going over more things that I wanted to talk about. And today I think it's very important to me that I take my time, because I haven't been doing this in a long time, and I honestly haven't been in it like I used to be, but that doesn't mean that I don't look at things. I have my own opinion, so I'm going to share my opinions, okay? So I have a question that I don't see too many people who are investing in Chinese companies really talk about, or even US companies. Like, how do we feel about a stronger Japanese yen, a potentially weaker dollar, and maybe a yuan that lowers strategically in ways that could benefit them from both a strong yuan and a weakening dollar, to remain competitive in exports compared to Japan and the US, but also be attracted towards capital inflows? And what I mean is, like, what if Japan and China compete in a lot of the exports, like automobiles, electronics, things like that? If Japan raises interest rates, which they just did recently, that can be good and bad. So it can be bad for the US markets in some ways, like if people are using like the yen carry trade, for example, that could be negative towards the US markets. And the last time we saw substantial interest rate raises, at least compared with respect to Japan, was in 2006, 2007, I believe. Around this time, prior to the market crash of 2008. And there's numerous different reasons why this could happen. But from my understanding, the Japanese and US markets have been doing very, very well. High CAPE ratios, high PE ratios, while China has not been doing that well in comparison. So it's like one has more to lose than the other. And China, in my opinion, China's market is much lower valued than the United States and Japanese markets at this moment. So like if Japan and China do compete in a lot of exports, Japan raising their interest rates would make them even less competitive with Chinese exports and US exports. But at the same time, Japan could be raising interest rates to stabilize their economy and also attract investments in the form of maybe into their bonds and things like that, or to buy their debt, or just promote more stability or strengthen their currency and more stability. So this could look attractive in a sense where maybe Japan focuses on stabilizing their domestic economy, so they don't get exploited by, foreigners coming to Japan and buying up things at unfavorable rates for the Japanese, or stabilizing the domestic economy so there's not as much transactions out with foreigners in the form of like tourism or things like that. It could also stabilize their values of their currency, so it's not really inflated away at such a rapid rate. It could also stabilize their financial markets as well. It could allow for a more slower and gradual appreciation of their asset markets, because at the rate they're going was a little unstable in my opinion, just like America a little. That's a nice word. That's a nice way to put it in my opinion. And sorry, I'm a little sick. Maybe Japan and China could benefit from money moving away from the United States, and maybe Japan and China could maybe work together in ways that I think aren't really realized or being addressed. So I know I just kind of said a lot of things there, but I think the implications would be like Japan raising interest rates. So that would slow down their export competitiveness while they stabilize their economy and kind of close their borders in a sense, but not really. I mean, that's, you see what I'm saying though? Like, I'm just using like example. While the United States lowers their interest rates, increases their money supply, which could be seen as, well, not very attractive to foreign investors in a lot of ways, because it means that maybe their debt isn't as competitive, or like their investments aren't as competitive. So like the United States, in my opinion right now, isn't very competitive. If I were a foreign investor, or if I were an investor in general trying to seek the highest returns, there's a few places I would look personally. One would be like United States, maybe small caps or medium caps that haven't really benefited from lower interest rates, but they did be prior lower interest rates, and they need constant financing and the ability to raise capital easily. And maybe at the same time, I would also think that all the cryptocurrencies and all the meme coins and all the high PE ratios of like Palantir or Nvidia or Meta or the Magnificent Seven, it's a little scary, because these companies are at values that I think are a little bit overvalued in my opinion. So if I were an investor, I would be looking in places that have the means of production, has a lot of value, but it's not reflecting the value of their assets for like whatever reason. So like China, for example, where it's like the CAPE ratio is much lower, the PE ratios on average are much lower. I believe that there's a lot of value in China at these prices. Now, I wouldn't be saying if it was the reverse, right? Like if I didn't think Chinese stocks were undervalued for amount they produce, a value they produce, versus like United States, if they were producing near value or same or around there, but their value, their stocks were much lower and their assets were priced much lower, then I wouldn't be saying this. But at this current moment, it appears to me that there's a lot of unrealized value that's reflected in the value of their asset price versus the amount they're actually producing, like a value they're creating. So I think there's a lot of value in Chinese companies right now. At the same time, I think that when it comes to geopolitical tensions, that's one of the main reasons why people you'll see don't invest in Chinese companies. At least that's the sentiment, right? Like there's a lot of sentiment amongst investors that will say something like, I don't invest in Chinese companies because they're communist, or I don't do it because they are authoritarian, or I don't do it because of World War III, or whatever, whatever reason, right? But there's actually been a lot of positive things towards China, and like the previous SEC chair, Security Exchange Commissioner, I think the previous one during Biden's administration, was much more aggressive towards China than the current one and the one prior. The other one prior to Biden seemed much more open to IPOs, SPACs, and Chinese companies using the U.S. financial markets to raise capital. On the other side, I think that the SEC chair during this time of Biden's administration was much more aggressive towards the Chinese and IPOs and SPACs. So, in my opinion, that despite Trump's rhetoric being negative, I actually see a lot of positive things towards China. And when you look at it, it's sort of like understanding what could happen in the future and why. So, understanding like Japan raising interest rates and the significance, the United States wanting to lower their interest rates and why China is a little bit slower to respond, but responding. So like I noticed that the United States and Europe, for example, a lot of the times they follow each other with their monetary policies, but China will sort of is in a position where it can respond to how the world is handling itself and then best manage itself and best kind of manage itself through these ever-changing conditions. So I personally think that China will try to maximize Japan raising its interest rates while the United States and allies are lowering its interest rates, and try to find the best of both worlds in between that. And I think that all governments and countries, politicians, world leaders, and businesses understand exactly what each country has to do, because it's not really rocket science in my opinion. It's more about understanding the field and understanding how each player is going to play the game to maximize their personal gain. So I think based on that, we can sort of understand like what each country could probably do, but it's not entirely like solidified. So for me personally, if I were to put myself in the Chinese government shoes, I would try to boost its stock market, which we've already been seeing, especially the Hang Seng, because the lower the United States and some West could make China more attractive at these prices, while the United States, large cap and high premium ones, much less so. So like as I was saying earlier, like the United States does have some attractive investments in my opinion still, like in small cap and medium cap, and even micro, but because they would benefit from like lower interest rates, for example. But large caps and a lot of the United States companies are going through high valuations at the moment that a little bit scary, right? If you were trying to find value, especially if you are not just the government, but if you're like a firm and you're trying to chase gains, right? It's like, are you gonna buy Nvidia and you might get you may not get positive gains at the end of this year, or are you going to try to maximize your return on investment by maybe seeking investments that has a lot of value but it's not priced in yet, so I think for me personally it'd be very scary to invest in a lot of American large caps right now, because if I had billions of dollars to invest in, it would be very scary to like maybe buy the top of the American market versus like investing in China where my returns could be tenfold, for example, because that's how low the P ratios are in comparison, or the CAPE ratios are in comparison. So also, the reason why I would boost the Chinese economy and stock market is so I can make deals with America. So like if I were the Chinese, for example, I would try to promote higher stock prices so I could raise capital through US markets by mainly share dilution and convertible notes, and then use that to follow Trump's ideas of possibly opening factories in the United States. So there are two scenarios in which the world could be headed. It could be like Trump being more imperialist than, at this moment in my opinion, like, America is neo-colonialist, neo-imperialist. Like, they'll rely on imperialist exploitation through financial markets and economically, but not through physical means, like actual imperialism, invading physically someone's country. So, there's two choices, maybe three, I think, where it's like Trump will say, "Oh, I'm going to invade. I'm going to take back the Suez Canal, or I'm going to, I don't know, I'm going to take Greenland and take Canada and stuff like that." The way he's saying it is like a mix between like physical imperialism and neo-colonialism, but the other alternative is, rather than BRICS and the Chinese and China and all these other countries build economies away from the United States, is to continue its interconnectedness, where like China and the United States, China and the BRICS are connected and economically interwoven with each other. And that's probably one of the best, more realistic ways on how things can handle itself. And if I were China, for example, rather than Trump move towards imperialism, or America move even towards more imperialism where more people die, I would rather bail out and reform the American economy. So like the American economy, or the American or IMF, for example, would generally loan out in countries that are stressed out or in need of a bailout through the IMF, but it wouldn't be just in the form of economic reforms. It would be social, economic, and political reforms and things like that could promise that they'll be more aligned with whatever the IMF wants at that given moment. And I think it's the reverse now, where China and the BRICS, for example, or the Belt and Road Initiative, could be offering the United States a way out, right? So rather than the United States having it their way, which is unipolarity, where they maybe are very neo-colonialist, you could see a change where it's more multipolar, it's more aligned with the overall international community, not just the G7 and the United States. It's more beneficial to like countries that have been historically exploited and want to be, it could promote more equality in the UN Charter and the Sustainable Development Goals within the United Nations. I think that's probably like the offer that America has. And because at this moment the United States sort of is a rogue state that's in a lot of debt, that's either gonna help its domestic economy by physical imperialism, or it's gonna be financed and go through a debt restructuring of some sort, And I think a lot of that will come from China and BRICS and the rising countries that could help the United States, but on its terms that actually help promote things like common prosperity. So again, to go back to what I was saying earlier, if I was I think what Trump really wants is for Chinese companies to build their manufacturing plants in America. And I think it's kind of apparent if you've been following these sort of things, but at the same time, I don't really think people understand how it could happen based on the current events economically right now. It sort of mimics the Reagan's administration a lot, with different characteristics as well. Like, you can't compare Japan to China in a lot of ways, despite there being similarities, because the demographics are just substantially different. You can compare like tier 1, 2, and 3 cities to the demographics of Japan, right? But at the same time, Japan's and China are just in different times, different circumstances, but you can see a lot of similarities, and you can use that as a framework to understand what could be happening. So, in my opinion, again, to circle back to what I'm saying, I'm sorry, I'm sick, I'm doing this all unscripted. I think if I were Trump or the world planners, for example, I would make a deal with China. And it would be the United States in a losing position, but I would tell Americans that we're winning. But I think I would know that America is not in a position to be really bargaining they are in a losing position while China is in a much more dominant position? Well, it depends on how you look at it, right? Whether you want to help the United States or have them act like a baby and then like bomb everybody, right? I mean, that's just like extreme. But I'll probably go into like the more the different alternatives of what could happen between two extremes, but one is more likely than the other later. But yeah, I would Trump needs Chinese resources and Chinese economic development help. And there's no way that Trump's going to be able to get that through other countries in the way that he suggests. I personally think that Trump really wants Chinese electric vehicle companies, for example, as one of many examples, to come to America. And he's offering a lot of he's offering very favorable deals of, I think it's like lower tax rates for these foreign companies like China to build their companies in America, manufacturing plants in America, which could provide jobs, skilled labor, economic revitalization in these areas where they've been having economic deserts and skill drain and brain drain, so it can revitalize it with like Chinese economics and Chinese labor, skilled expertise and whatnot. And if I were China, I would want Trump to raise the value of my Chinese stocks. And the reason why I'd want this is because if I owned NIO, for example, I'm not gonna build a NIO factory in America because it's too risky. Because one, American government can just seize my assets, right? So like if I were to build a NIO plant in America, a car manufacturing plant in America, or BYD or Alibaba, or even just build up infrastructure and logistics or farms, things like that, the Americans can come in and just seize my assets as they did for Russia. So instead, I would say, okay, I have NIO and Alibaba, for example, and BYD listed in exchanges where it can be they can raise convertible notes and debt and financing from US investors and whatnot. I need $2 billion for NIO to open up a plant in America to provide you jobs, to provide you factories, so you can help, so we're basically bailing you out. So if I were Trump, I would lower interest rates, allow these Chinese companies to benefit from lower interest rates in America, which generally, lower interest rates will generally help firms chasing higher returns to invest in more speculative and lower and companies that generally benefit from a lower interest rate environment, like a NIO, for example, that may be viewed as more speculative, and it can raise maybe the stock value could appreciate tremendously through a mixture of both retail investors in America and firms and American firms and global firms that could put a lot of money into NIO stock or BYD or XPeng and things like that, which could allow NIO to like maybe dilute shares or issue debt like $2 billion or $3 billion or $4 billion worth, and in return NIO will cut a lot of its risk from geopolitical tensions, in a sense, to use that $2 billion of US money, in a sense, to open a factory in America and possibly open a joint venture with an American automaker, or just open up a factory, a standalone factory in America, which takes off a lot of risk for China, for example, and NIO, for example. That way, you could see like a NIO factory that is quote unquote paid for by NIO, but it's because they raised capital from like the Hong Kong markets or like the NASDAQ or something, or an American investors. And I'm sure that American firms will make out very well. Like they can probably time the market much better, buy the stock at a low and sell it at a high. But I'm sure a lot of retail investors will kind of be footing the bill for the most part in these types of things. But this could reduce risk for Chinese companies that are building manufacturing plants in the United States by them using maybe, American money in a sense, which is not really American, but yeah, just like, yeah, it can do that in a sense. It could also be looked at as a generous deal when opening plants. Maybe, just in case if the United States does end up randomly seizing assets from China, and he could offer tax breaks, as he has said, things like that. And at this point, there isn't much risk for NIO because they're like, well, I got this $2 billion plus from U.S. investors in the form of firms and retail investors, and I opened up my factory. So even if the United States did seize my assets for whatever reason, it wasn't really from China. It wasn't from Chinese investors. It wasn't from like the Chinese government. It was from American investors, right? Like that $2 billion cash on hand out of like their $5 billion or $7 billion or $8 or whatever it is. They probably know like, oh, this $2 billion was from these $2 billion from the United States. This one's from Hong Kong. This one's from the Chinese government, right? So it would be like play money in a sense, right? And this could be a win-win situation for both the United States and China, where the United States has more factories now, more jobs, economic revitalization, skill transfers, more interconnectedness with China, more jobs, and China could benefit from financializing its economy even more, especially in more industrialized areas like their tier 1 cities, for example. I would assume that maybe could benefit from like higher stock values and more financialization, which could also help bring more revenues for the country in a sense that could help their more rural and developing parts financialize and industrialize as well. So we'll see how that happens, but that's what I would do if I were the Chinese government and American government. I would work together to make some kind of deal. And I think it'd be really odd if the United States, for optics' sake, just gave NIO $2 billion in subsidies and said, here you go, open up a factory and it'll be profitable. But no, instead, it would be much more not secretive, but for optics' sakes, it would be more appropriate for those who are critical of like free markets, for example, or whatever ethics or moralities are behind that. So I think that's how it could happen. That's one way. So it is beneficial. Now you may ask, like, well, why cut like tax credits amongst electric vehicles in America? Well, it's because a lot of the tax credits going towards the transition of legacy autos in America is not really conductive. Like, I don't really imagine personally a lot of these American companies that are in so much debt right now that rely on internal combustion economics to really be able to transition without like a government lifeline sponsored by taxpayers. Like, I just don't see it. So it's probably better to kind of let them handle and manage their slow decline along with slow and gradual reformations within like the internal combustion industry and automotive industry, not just with cars, plants, and vehicles, but rental car services or infrastructure or O'Reilly and AutoZone and all these other kind of like supply chains and vehicle components and mechanics. This probable $1 trillion plus economy that is interwoven into American society today in the form of internal combustion engines and the use of it, it eventually has to slowly, gradually go away. But we cannot actually transition immediately because one, these companies can't do it without being without like a government lifeline, which could destroy the economy in some sense. Two, there's no way you can like shut down all these stores and supply chains that rely on nuts and bolts, gas, oil, internal combustion engine, and things like that because people will lose so many jobs, and America will lose a lot of its revenues and supply chains that are catered and efficiently structured to utilize internal combustion engines. I mean, imagine, right? Like, electric vehicles in general have much less moving parts. So if you were to remove internal combustion engine and you had electric vehicle instead, you wouldn't need the thousands of components and the supply chains that manufacture them and the jobs that provide these services to fix them or things like that. If you have electric vehicles, you may not even need an O'Reilly or AutoZone, for example, or a car parts piece. If you had a large amount of people use electric vehicles, so it's not as easy as just changing over instantaneously or by hitting metrics by like 2030, for example. Like, it has to be slow and gradual so that the real economy can catch up and actually make these gradual reformations. But I think it could happen over time. So rather than invest in a legacy auto which doesn't want to change, is going to be slow to change, cannot and has no financial incentive to change because they're so debt burdened right now that it wouldn't make financial sense to maximize their gain. It's better to let these legacy autos gradually decline, die off, maybe form joint ventures or partnerships, and find financing through the markets by these joint ventures with Chinese partnerships, then force them to change to compete. And we see that a lot with like Volkswagen and Xpeng, where like Volkswagen relies on internal combustion engine, but to cut costs of transitioning, they'll partner with like Xpeng, and the Chinese government and the German government will work deals out to make sure that both companies can prosper in the future. We'll probably see similar things with like, well, as you can tell right now, I mean, look at Nissan, for example. They're not doing too well because they are losing a lot of market share to more competitors coming from emerging markets. So you can see that like there's a lot of consolidation in the Japanese auto manufacturers right now. Like Nissan is merging with was it Toyota or Honda or something. So it would be a death sentence for these companies to make the changes to become electric vehicle companies. So it's better for them to like probably form joint ventures like Volkswagen and follow a very similar route. That way China can open its China can access these Western markets, but at the same time Western companies and Western economies don't let China just eat all their lunches, right? And I think it makes sense. I mean, it's not, of course it's not against, like, it's not really free market in a sense, but it's kind of realistic, you know, because you don't really want to destroy your entire economy and replace it with all Chinese exports, right? So this is probably, Volkswagen could be what we could be seeing more so in the future. But yeah, to me it makes sense to have Chinese factories come to America, form joint ventures, and help like these old legacy internal combustion engine vehicle companies like be pushed on a wheelchair by like Chinese auto manufacturers, and that'll allow maybe it could allow for Chinese asset values to rise again, along with more capital inflows and economic trade between the two countries as well, and they can both benefit from the success of the world transitioning towards electric vehicles and green economies. So I think, to me personally, it makes a lot of sense to handle things this way, but I'm pretty sure that the Chinese government, for example, yeah, the Chinese government, for example, wants the United States to make a lot of the financial backings for this in the form of like capital or yeah, through like money, while the Chinese can offer expertise, skilled labor, whatnot. And the trade is going to be much more complex in that, and maybe I'll go over that in a different video. I mean, so boosting the stock market in China could also help both the United States and China in different ways, and maybe even allowing for China to allow for more debt creation, maybe, but focus on developing rural parts of the Belt and Road Initiative as well, financializing its cities more. I would look at the United States as a recipient of the BRI at this point. And I think with the strategic way that China could handle Japan raising its interest rates and the United States lowering its interest rates, they can benefit from the best of both worlds. So they'll remain competitive in their exports and be careful with how they handle their debt creation, inflation, and interest rates, while increasing exports and offering more favorable deals, moving into higher value exports. And all this could allow for more domestic consumption through wealth effects like higher stock values, maybe more money back into real estate, which could also be done through a package, which could also be done with a mix between like the financial markets, like the stock market or real estate market or private sector, along with like government stimulus packages like direct coupon payments and things like that, or whatever they call, I don't know the exact name, and better asset values, right? So to create a more wealth effect, which can stimulate both the domestic economy while allowing China to have more foreign direct investments into the United States. This way it's not like, oh, China is going to be printing tons of money and just giving the Chinese people money, and then there's like no means of production. It's going to be like, no, China's going to offer a stimulus and helicopter money towards their domestic economy and people with a mixture of government coupons or whatever, or stimulus or direct payments, but at the same time also offering revenues in the private side by create a wealth effect, or like like China investing foreign direct investments into the American economy. That way they can create more revenue. And I personally think that Japan could benefit too by being close trade allies with China. And I understand right now that Japan and China are currently trying to reduce trade barriers. Like, Japan wants to export more seafood into China. And I do see that. I think it was I was reading this article where like the premier of Japan, Ishiba, and Xi Jinping had met up recently to discuss like better trade relations, like Japan allowing China allowing more seafood and food agriculture exports into Japan. So this could allow for Japan to stabilize its own domestic economy and offset some of its slowing down exports in areas they're competing in China with now, like automobiles and electronics and whatnot. And Japan can be more attractive just by proximity from the spillover effect from China's growth. But I'd also encourage China to share with not only the US and joint ventures or the EU like Volkswagen, but maybe with some Japanese automakers as well, in a similar way, along with win-win solutions. So like this could be where if you see Volkswagen and Xpeng do partnerships that are worth billions of dollars, it's not only them. Like China should use its quote-unquote winners of the electric vehicles in China to team up with American auto manufacturers and Japanese auto manufacturers, because the pie is huge. So they can sell towards the United States market, the EU market, the Latin American, Canadian, Australian, Africa, for example. So they can all sort of share the profits and promote common prosperity at the same time, rather than historically being winners like Japan and Europe and the United States. And I think this is the only way it can really be done, because everyone has to win together or no one's going to win at all. And, to speculate more, I think governments will use, if the United States does some kind of reformation within its system, it may have to use like a central bank digital currency, but I don't think I want to talk about that too much in this video, because I don't really want to. But if China already has a mix between like the United States already has its own unique form of like a UBI in a sense, or how it like distributes wealth to the private sector and the government. Like it's kind of a UBI at this point. It's just in a socially acceptable form at this point, mixed between like perpetual asset value appreciation for the most part, social security, disability, social security income, whatnot, pensions, 401k. So they already have their own UBI in a sense. It's just in a slightly different form than like Andrew Yang's UBI, right? Like Andrew Yang's UBI was different from like what MLK could have proposed, or what Thomas Paine suggested for UBI, right? So it's just a different sort of like a UBI with different characteristics, right? For me personally, I think it makes a lot of sense for outcomes to happen this way, and I think that Trump could be wanting to handle things this way. So I don't know, for me personally, I may position myself in this manner to capitalize on the changes on the way I see it happening. And I think personally that maybe I could be looking at this entirely wrong, but if I were other countries now, like the international community, I wouldn't want to continue be doing business with the United States over China, and other countries that could be restricted by the US. Like ideally, doing business with other countries along with Russia and China, and any other country that would be good for common prosperity or expanding the pie. The UN Charter and promoting sustainable goals of the United Nations would be ideal. And maybe the United States could be positioning itself to reform in ways that are so unimaginable that it would basically promote it to be less of a burden onto the international community, while aligning with the majority of what the international community wants, like sustainable development and honoring the United Nations and the UN Charter. And I could see China, if the United States chooses not to align with the international community, I could see China, BRICS, and other countries aligned with that to build economies and supply chains away from the United States, which would probably encourage a United States economic collapse within the US, which could only be managed through strict controls by like the CBDC, or strict monetary or economic policies, or things like that. And maybe America could be even turning more imperialistic if China and the others don't bail out the United States or helps it towards a stable path of reformation. But to me, when looking at the financial markets and how the economy is going, the United States is in debt, and it's trying to seek a bailout. It's going through like this massive debt restructuring program, and its sponsors are going to be China and the BRICS and the BRI and the Asian banks and its creditor nations and the emerging markets and the international community. Because as the United States has been, it's relied heavily on neocolonialism and legacy colonialism and exploitation. So the United States has to reform itself in ways to be better in the future, or it's going to fail. And the only thing it can really do is be better in the future. There is imperialistic, like physical imperialism, but I doubt that's going to happen with mutually assured destruction through nuclear warfare. I just doubt that's going to happen. So I think it's going to be more of a quote-unquote kicking the can down the road. But I think that's sort of a weird way to look at it. Like, I get it, but I don't think that's entirely accurate with how the United States is doing it. So we can look at like things like the Hang Seng, for example. Seems like last time they really benefited from lower interest rates, and maybe because these things were happening prior to Biden's candidacy, even though if I think it doesn't matter, it's a uniparty system. But we could see that like the lower interest rates promoted these types of deals. But this probably is a continuation of what we saw in 2020, in my opinion, where despite the signed trade deals we saw between Trump and China before, there's probably more backdoor deals. And like this, what I have just said in this video, it would be example of like a backdoor deal, and it's probably one of many. Now, this isn't very, I mean, it's not proven, but it's just speculation, and you can capitalize on that speculation, or at least try to. So yeah, when it comes to the United States using like a CBDC or things like that, you have to remember that throughout American history, there's been many currencies. So let's see. So the United States actually had a lot of different types of currencies before. Like they had military bonds, war bonds. They had notes and debt that was kind of different for each city or whatever, each state or something. They had silver dollars. They had different types of notes. They had I don't know if I can find it, but the United States has gone through many different types of currencies before. So like going from I wish I could find it, but maybe this could be it. Yeah, here we go. So like going from colonial notes, and then going to like Franklin colonial notes, and then going to continental currency, and then the first $2 note. Well, you know what? This isn't even it. I can't. I don't know. Yeah, I wish I could find it, but I don't think I can. And let's see. U.S. currencies. Yeah, so I don't know where it is. I can't find it, and I should have found it earlier. But yeah, going from like the United States notes, continental notes, man-made notes, war bonds, tradable things like that. Switching from one currency to another, or having it reform or change in nature, has always happened. Going from like individually, going from state banks into more federally owned banks or centralized banking is also something that will continually happen. Going from more individualistic types of monetary financial systems that allow for more autonomy and sovereignty to some extent has been going on throughout American history, and a lot of wars have been fought through that too, to some extent. So I really wish I could find it, but I don't think I'm gonna find it today. Let's see, we'll try one more time. American currency changes over time. I mean, this is probably the closest thing I'm going to find, but this is not it. Yeah. I mean, maybe this could be slightly it, but okay. So I think it was during this time that each colony had their own type of like colonial note. And for example, if you were to like go from Pennsylvania to North Carolina, the fluctuations in its value from one state to another compared to another note to another would change drastically. Like there would be like no uniform uniform currency. So there's been a lot of changes within the United States. So like going from like more bartering systems and then to like using like physical currency that's like coins of some sort or metals, and then going into notes like paper notes. And there's been differences between like the South's notes versus the North notes, between like, you know, during the warring period between the North and the South, like they used different currencies as well. One that was more focused on centralized banking systems, the other one not so much, which completely lost a lot of its value after the South had lost to the North during the American Civil War. A lot of these like dollars, notes, means of transactions, currencies, they've lost their value over time despite having some value at one point in time. So the constant change in development, reformations, and evolutions of these currencies have changed a lot. So if the America needs to become more economically efficient because climate change and things like that are real, and they need to do a debt restructuring that would promote more economic efficiency and things like that, and more centralized planning that is more transparent towards data collectors or other governments, then yeah, you know, having a ledger system that's even more accurate than the current digital system we use now is ideal for a creditor or a country lending debt to the United States that's trying to reform itself economically. And it's just allows for better management of the economy as well. Now, I'm not saying I agree with this morally or ethically. I'm just saying like this is what it is, okay? So it's always changed throughout history, and you know, it's just become more uniform, and at the same time it's become better for centralized planning and things like that. And I can understand why people are against it, right? My economics professor said that the Federal Reserve, for example, wasn't always viewed as ethical by some, but he believes it was necessary. And you can have an extension of this or a progression of this through things like CBDC. So all the meme coins and speculations we see now, it could be allowing for introduction of these things become more normalized. Do I think it's going to happen tomorrow? Probably not, but if we just look at American demographic, for example, it would be really hard to crash the markets or lower the value of the market growth if this demographic is still alive. It would also probably be difficult for them to use things like central bank digitalized currency and things like that, or use the stock market and their 401ks without having someone help them, or a money management of some sort. So when this demographic dies off and this demographic goes here and, you know, this demographic moves up, I'm sure you'll see much more economic efficiency by then, which could also be planned when it comes to negotiating debt restructuring and bailouts by creditor nations. So like, again, like rather than the IMF bail out another country, it would be like other countries bailing out the United States, like China being one of the largest creditors towards the United States. And these are types of things that the United States has to do in order to promote reformations. Now, why do I have all these up? Maybe it's because I was going to talk about the things I saw. So yeah, it seems like when the United States dollar lost some value while lowering interest rates, the China's interest rates in comparison didn't drop nearly as much as the United States. So yeah, we can use this as an example. In 2020, when the United States lowered interest rates, China didn't really lower their interest rates as much. which meant that the Chinese yuan was going to be stronger versus the dollar at this time, and Chinese stocks did benefit, right? Until, you saw a reversal in this where the Fed had an idea of maybe raising interest rates, and then you saw a reflection of that. Japan raising interest rates as well is very interesting, because the last time I think we saw this in a substantial way, ever since, I don't know, Abe, I don't want to talk about Abe too much, but we haven't really seen this amount of increase. Well, we saw a decrease around here, but we haven't really seen it since 2006-ish. And then we had the financial crash of 08. Now, we could say that, like, China is going through that to some extent, but I would have to look into that much more. I do think it's a little interesting, though, to see how there's some similarities here, and what it could be moving here, and what it could be meaning here. Could we see another similarity in the United States again? I have to look into that more. Maybe, And I was looking at this. I mean, I listened to it. I don't really care that much, but I did listen to it a little bit. It's like, whatever. And I thought it was very interesting how, Trump at Davos did change the eagle's face towards arrows, which generally means more of an aggressive stance. But we'll see, right? So there's many alternatives in which way the country could be headed, and I was just thinking this was pretty interesting, but it's not really pertaining to anything that we're discussing today. So I think moving forward, I'm going to try to do a little bit more research on what I think could be happening in the future. But let's just take one more look at something. I mean, based on the Fed's dot plot, we could see interest rates lower at these rates, but you never know what could happen, right? If it's enough to perhaps finance a lot of what China wants to do and what the United States could be asking from China, maybe. But yeah, I'll probably make another video. This was just to share some general ideas of like what I think Trump would want, what I think the Chinese government could do, how I think Chinese assets could respond to this, and my ideas on a few things on like how US and Chinese relationships will turn out in the next 4 years to some extent. Now this could change, but yeah, so none of this is financial advice. Please do your own research. This is just my humble opinion. So